Good evening, everybody. I'm Pierre Roberge, the Daily Trader. It is June 13th, and we are going to take a look at Tesla stock from a technical analysis perspective. My goal in doing these videos is to help you understand how you can use technical analysis to make better trading and investing decisions. But I'm not a financial advisor, so please do your own research and make your own decisions. So Tesla went down pretty far today. So we are down $49.48. That's 7.10%. Closed at 647.21. Post market, we are up a little bit. So let's look at what we have right here. Tesla was in an upward channel right here, upward channel. And we went from this support here to this resistance to this support. And then we tried to go higher, but then we got stopped by this big downward resistance, this big downward channel that has been in play for a long time. We were stopped there on June 9th and we fell down. We were still above support. Theoretically, we could have gone back up because the supports are more important than stochastic. But stochastic was not above 60. And once we lost on Friday this upward support right here, then things were a little bit iffy. And what happened today is that we are just coming down quite hard. Let's go see the 1 hour chart. So on the 1 hour chart, we see here that we have a gap. We have a gap down right here. So we came as low as 644 during the day. And then second hour, we climbed back up a little bit and then we lost everything. And now we seem to be bouncing. We seem to be bouncing on this little support at 644. Let me put it here. 644 is a little bit of a support. So this is a temporary support because horizontal supports tend to be temporary when we are in a channel. When we are in a congestion zone, the horizontal support is the main support because this is what defines a congestion zone. We are going sideways. But when we are going like this or going like this, then these horizontal supports are a little bit less important. They stop us for a little while, but they don't necessarily mean that we are going to stop there for good. And in terms of indicators, stochastic at is it? Yeah, it's at 2.57. Everything is super in the tank. So tough day in the market today. Let's take a look. Let's go back on the daily chart and let's take a look at the VIX. So VIX, tremendous increase. So we have been increasing since June 9th and also on Friday, but we stayed within our downward resistance here. So we could have stopped right there and come back down. But this move today, we have a big gap here. Look at how big the gap is. And we have a green candle. So we start from here to there and we did not really stop in between. This is pretty incredible, a big increase in volatility in the market. If we look at Dow Jones, so Dow Jones broke, I had mentioned on Sunday that 31,222 was a very important resistance for Dow Jones, and we crossed that with a pretty big red candle. I don't know where this is going to lead, but this is not looking very good for now. S&P, SPX, S&P 500 dropping also, dropping like crazy. This is pretty incredible. For NASDAQ, we have multiple downward channel. We have this one right here, this one right here, but this is not steep enough because then within this, we have a steeper downward channel right here. So right now we had touched this upper resistance right here, and now we seem to be coming down to maybe 10,300. And for NASDAQ 100 looks a little bit better because we are close to this support. So maybe things are going to come back up for NASDAQ 100 right here because we are in a double support kind of situation. So I hate to say this, but people that have been buying the dip have been burned since the beginning of November because there were many dips. Oh, this is a dip, I'm going to buy it. This is a dip, I'm going to buy it. This is a dip, I'm going to buy it. This is a dip, I'm going to buy it. I'm sorry to say, but you have been buying high. You have been buying high because we are still in a downward channel. And until we come out of that downward channel, the trend means that we are going down. We should buy only when we start coming out of that downward channel. That's it. This is when we should start buying, when we come out and not before. But we need to also realize at the same time that buying outside of this downward channel means that we might not get the actual ultimate low because the stock might be doing something like this and doing this and then coming out here, and we are supposed to buy here. So yes, we did not buy at the ultimate low. We lost this part here, but we did not buy high because we have chances on our side that this move is going to last for a long time and that we are not going to come back down at a lower point again. So basically, this is the philosophy of this channel. We are trend followers. We can buy on a support bounce, but we know that this is risky, especially in a downward channel, to buy against the trend. A downward channel means that the trend is going down. And if we buy up against a trend, there's a more significant risk there. But once we come out of that channel, then the trend is no longer going down. So then it's less risky to buy. Thank you very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. Click on my TradingView affiliate link. I'm going to wish you a great evening. We are going to talk tomorrow, and I'm going to tell you à la prochaine.